Welcome to NSNA's virtual 2020 Summer Leadership U Conference. This session will focus on the role of the treasurer, fiduciary facts. My name is Stacie Kinsey, and I'm your 2020-2021 Secretary-Treasurer of the NSNA. Our presentation is only allotted 10 minutes in duration, so we'll have to be brief. My first piece of advice is to download the NSNA's Treasurer's Handbook. It has a wealth of information that will help you navigate keeping your finances in order. We have here a quick look at the contents page where you can see the various tools available. You can download it from Guidelines for Planning page or email nsna@nsna.org. Treasurers have many responsibilities that are the life force of your chapter. I'd like to touch on a few of the most important duties, but please refer to page 3 of the Treasurer's Handbook for more detail. As custodian of funds, you are the person the other board members look to for input on financial decisions. Your input matters because you see the whole financial picture. The treasurer is the organization's visionary financial expert, much in the same way the president is the visionary leader for the organization. Your guidance will help all committees share the organization's funds fairly and help ensure the funds don't get bogged down in any specific area. When taking the role of treasurer, you may be overwhelmed by the number of things you need to know about your chapter or association in order to be a successful treasurer or board member. NSNA has prepared a checklist of everything you need to know in one place. You can get this online or emailing us. A fiduciary is an individual, corporation, or association holding assets for another party, often with the legal authority and duty to make decisions regarding financial and business matters on behalf of the other party. The entire board of directors legally has the fiduciary responsibility for the financial assets of the association or chapter, and are bound ethically to act in its best interest. It's important to note that the NSNA does not have any fiduciary responsibility to state associations and chapters. NSNA is legally separate from these entities and do not actively manage their assets, nor make business decisions for these entities. Also, associations and their chapters are not tax exempt under NSNA's tax exemption status. However, NSNA maintains an advisory relationship to help guide you to have a financially successful chapter or association. To satisfy your fiduciary responsibility, boards must use a minimum of 3 fiscal procedures: budgets, financial reports, and internal financial controls. I'll drill down to each of these and emphasize the basics on how relevant they are to creating and maintaining a successful organization. Listed here are some basic steps to creating a budget. They're also listed on page 9 of the Treasurer's Handbook. A budget is a financial planning tool and ultimately the blueprint for the operations of an organization for that fiscal period. Having a budget is crucial for the efficient running of your chapter. Budgets and actual revenues and expenses are monitored constantly for variations and used to determine if any financial adjustments are needed to maintain a balance. Ideally, budgeted income should equal budgeted expenses. Avoid drafting a budget where your expenses are greater than your income. Instead, cut expenditures to match expected income. On the flip side, overages should be added to your reserve fund, which should contain 50% of your yearly expenses. Here, we have an example of a balanced budget, where the estimated revenues or monies coming in are listed at the top and the estimated expenses are listed at the bottom. The total revenues are $18,000 and the total expenses are $18,000, which makes this a balanced budget. The next principle is financial reports. In order to determine if your budgetary plan is working and to produce information that is useful to the board and your members, it's necessary to produce financial reports. You should draft a report that compares your actual income and expenses to your budget. The purpose of financial reports is to document how well your association is achieving its financial plan. Your financial report should be included in your minutes, typically by an attachment to the end of the minutes. Here we have an example of a financial report, which reports the actual monies coming in and monies going out for the period, usually from the beginning of the fiscal period to date. A tool you can use to help prepare your financial report is this monthly finance report prepared by NSNA. It can be populated from the information from your monthly bank statement and your credit debit cards. You can request this Excel spreadsheet by emailing us. I'll have the email address at the end. The third and final tool used to satisfy your fiduciary responsibility are internal controls. These internal controls ensure the funds are properly accounted for. You must have a board-approved policy and procedure manual in place to guide the board on how to safeguard your financial assets and to comply with state and local laws. While all the controls are important, because of time constraints, I'll only drill into a few here. Have a solid transition checklist, including important dates. Many times, as a board transitions, the new board can forget to file their annual 990 tax forms. If you fail to file for 3 consecutive years, you will lose your tax-exempt status. At board meetings, all board members should review the bank statements and credit card statements for unusual transactions. This is very important for checks and balances. This safeguards your organization's funds and protects you as the treasurer from potential legal actions if funds are misused. When you have a change of officers, file a new corporate authorization resolution signed by the secretary, treasurer, and president, and file a new signature card with your current financial institution. There should be at least 2 authorized signers on bank accounts. The president, treasurer, and a state consultant or faculty member is recommended. Requiring 2 signatures and having 3 authorized signers helps to expedite payments. For large associations with invested funds, have an investment policy in place and make sure you engage a professional fund manager to manage the funds. Reserve funds. Ideally, associations should maintain 50% operating reserve fund or equal to 6 months of operating budget. Maintain accurate minutes. These are legal documents. Ensure that those present and absent are correctly listed. If quorum is present, that they reflect what happened at the meeting in regards to motions and actions. The outcome of the votes is recorded in the minutes and not how each person voted. Conflict of interest. Don't make decisions out of self-interest or in the interest of only part of the association, instead of the common good of the entire organization. When it comes to tax forms, those with annual gross receipts of $50,000 or less may be required to electronically submit a 990N, also known as an EPostcard, which is a basic questionnaire with 8 questions. There really is no excuse for not submitting this in a timely fashion. NSNA will require a copy of the 990 from state associations beginning April 2nd, 2021. In summary, the 3 biggest components for success as a fiduciary of your association or chapter's funds are the use of budgets, financial reports, and internal controls to ensure the proper use of your funds. If you'd like more information on any of the topics covered here, we've listed some additional resources. Thank you.